Happy Friday and good afternoon from the Shreveport office of Eagle Financial Management Services for the latest edition of the Jack and Bill Show.
Yeah, it's been a little while since we've done this together.
It was the Bill Show last week or the last couple of weeks.
And then it was the No Show.
And the No Show. So do we know if we're doing one next week?
I'm going to make a command decision to say no.
Okay, command decision. The markets are open, I think, next Friday for a half a day.
But then we have to go out and spend money to keep the economy afloat.
Yes. You know what? They call it Black Friday for some reason.
Yeah, it's black for all the men who have to spend money.
Yeah. We're coming into the Christmas season, and too often I act like Scrooge. And it's that time of the year. But we have had a spectacular year so far. We've had inflation in monetary asset prices. I think you talked about inflation last week. I'm sure we're going to have more on that in future episodes. But today, year to date, the S&P 500 is up 26.8% on a total return basis. It was down 14 basis points or 14/100% today in a mixed market. The NASDAQ composite was up 0.4%, closing back over 16,000 again. The Dow Jones Industrial Average, however, was down about 0.75% or 270 points. Do you know why, William?
Tell me.
Boeing.
Boeing.
The Dow has 30 members. It's a price weighted index, and Boeing was hammered down over 5% today because the Boeing 787 Dreamliner has had some snafus again. So I actually flew on a Boeing 787 last week that had, I think, 338 seats on it.
How many snafus?
No snafus. And it was an American Airlines flight from Dallas Fort Worth to Sky Harbor, Phoenix International. And
did they have beverage service?
They did run beverage service.
A lot of these are not doing it anymore.
They were handing out pretzels and water. And on the shorter flights, on that flight, it was pretty much anything you wanted. So we've had a rise in short-term rates in anticipation of rate hikes. We kind of talk about the 2-10 and the 30-year Treasury note and bond yields. The 30-year flirting with 2 earlier in the week, closed today just a shade below 2 at 191, 1.91%. The 10's at 154. The 2-year has escalated pretty sharply to 61 basis points. West Texas Intermediate crude oil down sharply today to $75.66 a barrel. That's down $2.76. Bitcoin higher, up 0.5% today to 57,600. Ethereum up about 6%. Gold down $13 an ounce to $18.51, and silver down about 1%, around $24.75. So again, we're coming into the. We're about to find out what retail shoppers are going to do this year with Black Friday and the Christmas season upon us.
I suspect it will be fairly strong. There's a lot of money out there.
And then I guess we're about to find out what this pandemic does too. The numbers have been curtailing. I read either yesterday or this morning, I can't remember, that Bill Gates thinks that this thing is going to be about like the normal flu once we get into mid-year, next year.
Oh,
But what?
this is shocking.
What's that?
Look at this breaking news. Biden administration says Christmas is canceled. They can't get Santa to come back to work.
That's pretty good, Bill.
Moving on.
Moving on. Yes, sir. What are we going to discuss today, William?
Well, it's that time of year. We're approaching year end, and we always have a lot of year end cleaning up, administrative type duties to do. And there are the obvious ones that, as they pertain to these clients, must be addressed. The big one is required minimum distributions. So for anyone out there who is 70 and a half or under the new rule 72, and you have monies and retirement plans and you're subject to required minimum distributions, these must be done. Start working on it, because if you fail to do that, you are subjecting yourself to a very hefty tax, 50% excise tax on those non-distributions.
My lovely wife is in the other room working on RMD calculations as we speak.
Our lovely Wesley was working on that earlier too. Anyway.
Yes.
The other issue that investors need to take into account, and this is all investors, if you have taxable investment accounts, look at your holdings. This is an opportunity as we approach year end to take advantage of tax loss harvesting. This has been a big year in the market, so you would expect to have realized capital gains on sales of securities for profit. Well, you may have some unrealized capital losses that you could realize by selling securities for less than what you paid for and using those realized capital losses to offset realized capital gains. So this is just a very tax-wise, smart strategy to do at year end. And then you can go back into those positions after 30 days. So that's something else to be taking a look at.
I'd like to add on to that, William. We're not in the business of giving tax advice, and we were talking about this. I was visiting with a client Monday afternoon who had roughly $255,000 worth of realized capital gains, and he has advised me to do nothing if we like any of the names that we're down a little bit in. So I think it's important, if you have a lot of realized gains, to talk to your accountant about it, because I'll give you another line of thinking on this. And I might add also, this is a time of year when you could look at your account right now and say, well, I don't have anything to worry about. But if you own 40 Act or what we call open-end mutual funds, or just mutual funds, they're required by law under the 40 Act to pass their taxes onto the shareholders, whatever they made during the course of the year. And so you'll see your mutual fund decline in price one day, and you get a bunch of shares typically reinvested, and you're taxed on the amount of the distribution. And then you might just turn right around and potentially sell that thing, because you can't just look at a mutual fund and know whether you're up or down in it.
That's right.
You can for tax reasons, but because they pass the gains, realized gains, out typically each year. But here's what I was getting to, Bill. We believe it is the goal of the current administration to greatly raise taxes on the general population of people that own marketable securities. And they're even talking about taxing unrealized gains next year. So I think there are, I know of some accountants out there that are advising that instead of trying to offset your capital gains by realizing losses, and making those capital gain numbers smaller this year, they would say, let's realize all the capital gains that we can, because next year you're going to be paying way more. So
if that happens, and that is an if, we don't know,
yeah,
but that is a possibility.
it's a significant possibility. Correct.
Hey, one thing else, because I'm glad you mentioned the mutual funds and the taxation of those. I mean, it can happen, and this does happen, where someone buys a mutual fund and they could be down in it and then get hit with capital gains at year end. So you're basically paying taxes on someone else's gains.
That's correct. If you're eyeing some mutual fund purchases right now, you'd better find out what their capital gain distributions are looking like. Scheduled capital gain distributions between here and 12/31.
And most of these fund families publish that information. So
yeah,
if this is something you really want to go into, you could time your purchase after they pay their capital gains.
Yeah.
Well, we thought that we would share some things that have been coming up in recent client conversations as we uncover some things and wanted to share, because what we're finding is that there are things that we take for granted that people are just unaware of, just outside of investing in general. And one of the things that we're finding is that a lot of people, especially a lot of newer investors or younger people who just want to get started investing, don't understand that you don't have to have a large sum of money to get started. Anyone can get started in an investment program with just a small amount of money and start investing on a regular basis. For example, we have some individuals that we're working with who are depositing $50 a month into an investment account. And they're having
one doing $50 a week.
$50 a week.
And she watches the show sometimes.
Absolutely. But the point is that, you could get started with a very small sum of money, and you could do it on a regular basis, have the monies coming into an investment account automatically, electronically from your bank account. It becomes something that you don't even have to worry about. And then the monies, well, if you're working with us, then we put the money to work as the monies come in. So that's something that we want everyone to consider, because everyone needs to start planning for their future, and saving and investing is far, far superior over the long run than just sticking money in the bank.
Absolutely.
We're all in agreement on that. And when you're doing this on a regular basis, there's a term in the industry that's applicable, and that's called dollar cost averaging. So you're putting in the same dollar sum of money into your investment account. So when, say, the markets are down, you're buying more with your money, and if the markets are up, you're buying fewer. But it smooths out your cost basis over time, and it really does help.
It ensures over long periods of time that your average cost per share is lower than the average price.
That's it. That's it. So that's one of the things that we've been encountering recently. Here's another one. Roth IRAs. Now, a lot of people are familiar with Roth IRAs, but may not know that you can contribute to a Roth IRA even if you are participating in an employer-sponsored retirement plan. So, for example, you may be participating in a 401k or other employer-sponsored plan at work, and you would still like to contribute more towards your retirement savings and would like to do so outside of your 401k. Well, if you're eligible to invest in a Roth IRA, and it depends on your income, do it. That money is after tax. It's contributed after tax. It grows tax deferred. And then in retirement, you pay no tax on the distribution.
Yeah, it actually grows tax exempt.
True. Yes.
And yeah, think about that. Imagine that you have 100,000 in a Roth and you take out 500,000. when you're at a ripe old age, and you don't have to pay any taxes.
That's right. So if you're eligible and you have the discretionary income to make more retirement savings, the Roth is a good option, because at some point you may no longer be eligible because your income is too high. That limit is $6,000 per year, $7,000 per year if you're age 50 and above. Here's one that we've been working on recently. Jack and I recently met with a local business owner to discuss small business retirement plans for this business's employees. And there are some terrific small business plans geared towards small business, such as the Simple IRA, the SIP IRA. There's also an individual 401k. And so here is something that a small business can put in place to benefit employees, really strengthen the loyalty, and provide a tool for the employees to contribute towards their retirement, either on a discretionary basis, or it could be a defined benefit plan where the employer is making all the contributions. I'll tell you what, I'll cover the next one. You cover the last one. How about that?
Sounds good.
Here's another one that we have had recent client conversations about, and that is college savings. There are many different ways in which someone can save for a child's college education. And we all know that college education expenses have grown much faster than the rate of inflation. So there's an imperative to start saving, and start saving early. So there are vehicles that are available that can facilitate that, and there are pros and cons of each. A very popular college savings tool is called a 529 plan. Every state sponsors one, and it gives parents or grandparents or others who would like to establish this on behalf of a child, it gives them an easy way to make contributions. The money grows tax deferred, and then for qualified education expenses, the distributions are tax free. And then there's a custodial account. So we could open an investment account with our custodian, and we use Charles Schwab. We could open an investment account, and the account would be owned by the child, but because the child is a minor, it would be a custodial account. So there would be a parent or a grandparent who would have the responsibility for overseeing that account. And then at the age of majority, that account then reverts to the child. It becomes an account of the child. That you have more flexibility with. There are no restrictions as far as investments. So long as the money is being used for the child's benefit, you can take those withdrawals. And there's other pros and cons that we don't want to get into right now. But here's something else that we've been having some recent conversations with.
Cash management. Yes. We've had a number of people that have had a gentleman came into our office the other day, and he sits on the board of a nonprofit, and they had hired an investment firm that was rolling short-term certificates of deposits for them, and they called him up and told him it was too tedious. They weren't making any money, so they were just going to put it into a money market.
Also making.
And bank money markets are typically paying anywhere from 0 to about 0.05, maybe 0.1 if you
basically
find a
0
credit union. And we have cash management strategies, and I would say I'd call that low duration, low weighted average maturities, even negative duration. That means if you're fearful that interest rates are going to go up, you don't want to own bonds because there's an inverse relationship between bond yields and prices. We own some negative duration securities that actually appreciate if rates go up. We own adjustable rate securities. we're doing this. We own small issue baby bonds that trade like stocks for $25 a share. And I wonder if your friend that writes in all the time, if he's ever owned a baby bond. We bought baby bonds last year at 22, $23 a share, paying 7 3/8. They got called in at like $25.75 a share. I mean, we hit a home run on those, made as much as the stock market without the riskiness of the stock market.
These are investment grade bonds.
Investment grade, relatively short-term instruments that come due inside of 5 years. The ones we own typically inside of 3 years. And we're still able to get 6% yields on these things. And we've got some interesting strategies in the FDIC, government guaranteed certificates of deposit markets now, if you think that inflation is forthcoming. So we do. I mean, we can. We're working on a proposal right now for somebody. This client that's getting 0.05. Actually, the bank charges them a monthly fee, so their return is negative. And so
on a nominal basis,
yeah, I think it's like negative $90 a month. And we want to show them how to make 2.5 to 3% returns on their money in utilizing cash management strategies without undue risk. So
I remember when we really first started getting into these cash management strategies, and we've been doing this a long time. It was the Haynesville Shale. So if we go back to when the Haynesville Shale was really blowing and going here locally, and that, by the way, is a deep natural gas formation in this part of the country, landowners and mineral rights owners were getting these big windfalls from natural gas production. The banks were overwhelmed. They were not paying much in interest because they didn't need the money. And people were looking for a way to make more money than what they could do just sticking it in the bank. Well, back then, prior to the credit crisis, when the Fed jumped in and took short-term rates to zero, I mean, we could make over 4% just using a money market fund. 4%. Now, those days are long gone. But we're still.
They may not be long gone.
Well,
I think they're long gone. I think they're gone.
They've been
forever.
long gone. We'll see if those come back. But people are looking to make something on their money, even just cash that they may have to deploy in a year or under. And, for people who want guarantees, okay, stick it in the bank. You've got your FDIC guarantee, but you're also guaranteed to make nothing. So our strategy involves active management. We don't get paid on transactions like broker dealers. So it works. We can make the strategy work and cover the nominal fee that we charge to manage these accounts. So it's a good solution for organizations as well as households that have a need to keep some cash in reserve.
That's good. Well, Bill, this is a season to be thankful for all these strategies and thankful for
a good year we had in the markets,
for God, and thankful for our country, thankful for the freedoms that we exercise on a daily basis.
Absolutely.
And it's also a time to sit down for a big meal with the weird uncle or the relative that you haven't seen in a year or 2 years. So
why is Wesley pointing to you?
And
are you a weird uncle?
No, we're having Thanksgiving. But I am thinking about cooking up something kind of weird, just as a dish to see if anyone is brave enough, to try it. But I was reading today.
I'll give you.
I'm thinking about making some gumbo with wild turkey in it.
That's and maybe not weird. That's delicious.
Maybe some venison.
Delicious.
And I might smoke the turkey legs because this wild turkey was a 3-year-old, I think. And I read in the Wall Street Journal today, here's a helpful hint if you haven't purchased your turkey yet. you can read on the label on the turkey the age of the turkey, and you want to buy a turkey that wasn't older than 7 months. If you buy one that's 15 months old, yes, Bill, man, they raise those things up. They grow them quickly, get them fat, and then serve them for Thanksgiving. A 15-month-old turkey is cheaper because he doesn't taste as good. He's tougher.
Well, how do they know they don't taste as good?
Huh? Try one.
Oh, because they're older?
Because they're older.
Well,
they get old and tough.
From what I hear, there's a shortage of turkeys. So we may not even see 15-month-old turkeys in stores. So if you haven't bought your turkey, it may be too late.
Hey, one thing though, there was a shortage of jumbo lump, and we were able to get jumbo lump on our redfish last night and didn't have to pay extra for that. So, but well, I know you're going to be getting up at 5 o'clock to do Black Friday shopping. So I've got a shopping idea for you as well, William. So one of the things that my beautiful wife loves to do for me, sometimes I'll come home and I'll open up my closet where my clothing is. And usually I'm about a month late in discovering that there's something new existing in my closet. But I noticed the other day there was something that looked like a cross between a shirt and a jacket hanging up in my closet.
A shacket?
It's a shacket. Feel that? So
I'm good. So, I take your word for it.
So it's expensive. I told her to get it in an extra large because we're coming into the eating season, Thanksgiving and Christmas.
What was summer?
And but on a crisp, chilly day, like today, if you're torn between a heavy shirt or a jacket, get a shacket.
Oh.
Yeah.
Can we shack this
show? Okay.
Okay. LSU is hosting ULM, I think. Louisiana Monroe Saturday. Is that right?
That is correct.
And then their season finale will be Texas A&M.
Ooh.
If they win both of these games, they have an opportunity to play in a bowl game. I think that's highly unlikely. But possible. And who are the Saints playing, Stacy? They're playing on Turkey Day. She doesn't remember. So the Saints are lost their quarterback, Jameis Winston. They're actually playing. I thought they were playing Thursday. They're not. They're playing Sunday at noon against Philadelphia. So, correct. Pardon?
They're playing Thanksgiving.
Oh, they are playing. I got that wrong. So they're playing this Sunday at noon against Philadelphia, and then they play 4 days later.
Oh, we just got a comment.
4 days later against the Bills.
Are you wearing your shacket on Thanksgiving Day?
I'm going to have to test the air.
Oh, okay. Well, we've tested the air. It's getting a little heavy. So we'll call it a show. How about that? We wish everyone a great Thanksgiving next week. We will be back the week after next. Have a great weekend.